It's been a busy week in the Forex markets, and Daryl Liew from REYL Bank joins us on the line all the way from Singapore to take a look at Asia's biggest economic movers of the week. Daryl, starting off looking at China. China recorded GDP growth today at 1.7%. So is the world's second largest economy showing signs of slowing down?
Well, I think if you look at a quarter-to-quarter move from 1.8% in Q2 to 1.7% in Q3, it does suggest that the economy is slowing a bit. But if you look at the year-on-year growth, China is still growing at a 6.8% clip that the Chinese government has been targeting. But I think looking forward to 2018, one can expect that the Chinese economy will continue to slow, especially after the 19th Party Congress. President Xi Jinping basically came out to say that, GDP growth per se is not the be-all and end-all. It's not the only target for the Chinese government moving forward. They're going to be looking at other issues as well. For example, environmental issues, quality of life, cultural development. So I think one can expect that GDP growth in China will continue to come down slightly in 2018.
Now moving over to Japan, Bank of Japan held monetary policy unchanged and also held their inflation outlook. So what does this mean for the Japanese economy in 2018?
I think one of the aspects here for Japan is that we basically expect monetary policy to remain easy for Japan into 2018. For one thing, you have the 10-year bond yields in Japan, which the Bank of Japan is kind of controlling at the 0% level. That probably will continue for quite a while more, primarily because as you mentioned, inflation hasn't really been an issue in Japan. But also, I think one of the things that we need to consider is that Bank of Japan Governor Kuroda his term expires in April next year. So I think they probably won't want to rock the boat too much. There's possibility that he might get re-elected as well for another term, especially after the ruling LDP party maintained their majority after the recent Japanese election. So it appears that it's probably going to remain the status quo for Japanese monetary policy, at least in 2018, which will be quite favorable for the economy and the stock market.
And finally, what other Asian currencies have we seen moving significantly this week? And have any been a surprise to you?
I think we've got to look at the 2017 Asian currency performance in context, because a year ago, in 2016, a lot of these Asian currencies actually corrected quite a bit as the US dollar strengthened significantly. For example, the Malaysian ringgit suffered quite big losses against the dollar in 2016, but it was one of the better performing Asian currencies in 2017, bouncing back almost about 10%. Korean won was probably the best performing Asian currency, up about 12-13%, but there are quite a number of other Asian currencies that rallied high single digits, low double digits as well. The Thai baht, Sing dollar, for example. So I guess the big question mark is whether this gains could be sustainable into 2018. And basically, when you look at what's happening in the macro side with US tax reforms coming in, potential boost to the US economy, there could be some argument to say that possibly some of these Asian currencies might give up some of the gains into 2018. But having said that, I think with the strong growth in a lot of these Asian economies, I think probably we could say that Asian currencies will probably hold their ground for 2018.
Well, that's all from us, but we hope you had a fantastic trading week and look forward to catching up with you all very soon.